Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Wednesday the 6th of March 2013. Well, we've had another fairly positive start to the day. Remember yesterday, all the fun and games were about the Dow making a new high. Well, as we move forward today, FX is taking a bit of a front seat, really, because we do lead up to those big central bank meetings. So it kicks off today with Bank of Canada at 3 o'clock London time. Then we move into the ECB and the Bank of England tomorrow around lunchtime London time. We'll get the outcome of those. And of course, that really pivotal Draghi press conference, which takes place 1:30 p.m. London time tomorrow. What's the euro doing as we lead up to there? Well, the euro started to come off a little bit. It's still managing to hold above that 130 handle. As you can see here, this is the hourly chart. There is a bit of a small, very short term anyway, upward channel there. Managed to hold support so far at 130.30, but really the macro environment for the euro is looking very, very weak. We do tend to think actually there may be a little bit of a relief rally after that ECB meeting tomorrow, especially if the ECB doesn't cut interest rates or announce any new policy measures. We could potentially get back to that 131 level. 130.80 had been the prior highs. But remember, there's an awful lot of support of resistance now between here and 132. That 131.15 massive level, it's the base of the daily Ichimoku cloud. We do think any pullbacks will probably be quite shallow and will be used to sell into. And we still see us going sub 130, potentially down to 128.50, based on the fact that the economic growth outlook is just so much weaker for the Eurozone compared to the US. Now that brings me on to the next big theme. Yesterday it was all about stocks, the Dow cracking record highs, but today it's much more about, well, the dollar. What's the dollar doing? Is the dollar higher? Is the dollar lower? Let's take a look here at the dollar index. Remember that what the dollar is doing is going to be very, very important. Yesterday it moderated a little bit, but it certainly hasn't come off. It's broken that relationship with stocks. So it's not falling off a cliff the minute the stock markets are making record highs like we saw yesterday. In fact, today the dollar is getting its groove back, is moving higher. The next key resistance level is that high from last week, which came in at 82.40, and then we really would be targeting 84. What we've seen since the beginning, since January really, has been this breakdown of this relationship with stocks moving higher alongside the dollar index. So in the past, we've seen the dollar have an inverse correlation to stocks and the dollar to fall as stocks rise. We think we're in a new environment now where maybe the dollar is being treated more as an asset currency, so as a growth currency, especially compared to what it was before, as a bit of a funding currency. Now, what does that mean? That's bad news for things like the Canadian dollar and the Aussie dollar, so those commodity currencies that traditionally had done very well alongside stocks. We actually think that it's make or break for the Canadian dollar right now, especially because we've got the Bank of Canada today. If they remain very, very dovish and dismiss or remove any mention of more of potentially removing stimulus from their economy further in the future in their meeting today, then what we could see is a dollar Canada break above that 103 resistance level back to 104. But overall, very constructive outlook for the dollar right now, and we could be moving into that new environment. So it could be very exciting for FX going forward with the dollar really being the center of things. But anyway, we'll have to watch to see how that plays out. But please do join us tomorrow for more. Thank you.